Welcome to Tax Notes Talk, a podcast from Tax Notes, the leading source of tax news, information, and analysis.
Welcome to the podcast. I'm David Stewart, Editor-in-Chief of Tax Notes Today International. This week, OECD Update. It's been a while since we checked in on what's happening with the OECD's project for modernizing international taxation for the digital economy. With details being finalized and legislation being adopted, a lot has been happening. We'll link to our previous episodes in the show notes, but now, here to talk more about the latest updates and what to expect from the organization in 2025 is Tax Notes Chief Correspondent Stephanie Soong. Stephanie, welcome back to the podcast.
Thanks for having me again.
So, before we dive into the substance of this, could you give us just the briefest of introductions to the OECD's two-pillar proposal?
Okay. The two-pillar proposal is a revamp of the international corporate tax system, and it consists of Pillar 1, which is broadly about revising profit allocation and nexus rules and dealing with digital services taxes and transfer pricing simplification. And Pillar 2 is about global minimum taxation.
So let's talk about what has the OECD been up to since the last time you were here?
Well, 2024 seems to have been a very busy year for the OECD and the OECD Inclusive Framework on base erosion and profit shifting in terms of implementation of these two pillars.
So why don't we start with the second one? Let's go with Pillar 2 and what has happened there lately?
Well, back in April, the OECD published an updated commentary to the GLOBE model rules that consolidated 3 sets of administrative guidance that were released last February, July, and December. And just a reminder, the GLOBE model rules are supposed to make large multinational enterprises pay an effective tax rate of 15% wherever they operate. The OECD also released another set of GLOBE administrative guidance in June, and that covered several technical topics like deferred tax liability recapture. That was a new one for me. I didn't know what that was until I started writing about it. This also has implications for companies calculating their effective tax rates under the GLOBE rules. So a pretty important topic for taxpayers. The OECD also published a Q&A document in June about a streamlined process for identifying jurisdictions whose GLOBE rules qualify as being compliant under Pillar 2. And then the OECD held a public consultation over the summer on a draft user guide for the GLOBE information return XML schema, the technical format that tax administrations will use to exchange GLOBE information returns that taxpayers have to file. And in September, there was some movement on the subject to tax rule, which we don't really talk about too much, but it's equally important. So in September, some jurisdictions started signing a multilateral instrument for implementing the subject to tax rule. This lets developing countries impose more tax on some cross-border payments when they are subject to a nominal tax rate of less than 9% in the recipient's jurisdiction.
Okay, and so what have we seen on Pillar 1?
Let me start with Amount B. Okay. We saw some movement on Amount B. This is an approach that would streamline and simplify transfer pricing for baseline marketing and distribution transactions. The OECD released an optional Amount B framework in February, some guidance in June, and an Amount B Model Competent Authority Agreement in September. And this Model Competent Authority Agreement is supposed to give effect to a political commitment that jurisdictions in the Inclusive Framework made to respect Amount B outcomes when applied by covered jurisdictions, which are usually resource-limited jurisdictions. On Pillar 1, Amount A, there was considerably less movement. On that agreement, you might recall that the Pillar 1 agreement is about a final text of a multilateral convention to implement Amount A, which gives market jurisdictions a right to tax some residual profits that some of the largest and most profitable M&Es make. It also requires parties to the convention to abolish any existing digital services taxes and similar measures and ban their future introduction. So the Inclusive Framework has been working on this Pillar 1 agreement for some time. They had an end of June deadline, and that came and went, mainly because there's some disagreement over a mandatory version of Amount B. Some jurisdictions want the parties to the MLC, Multilateral Convention, to also adopt the Amount B framework, make it mandatory for them. So that's been a sticking point in the negotiations. We haven't heard anything since really June. We've heard some officials saying, well, progress is being made, and the Inclusive Framework is frustrated that it's not happened yet, but we are making progress. So that's as far as Amount A goes. And We did see a formal statement from the Inclusive Framework's co-chairs in May saying that the group was close to concluding Pillar 1 negotiations. But, one of the co-chairs, Tim Power of HM Treasury in the UK, said in October that the Inclusive Framework has pretty much resolved all outstanding issues on the Multilateral Convention text, but all that remains is final agreement on Amount B.
Now, you mentioned that a lot was happening with implementation in 2024. Could you tell us about what's been going on?
So I'll start with Pillar 2 this time. So several more jurisdictions have adopted the GLOBE rules and domestic minimum top-up taxes that are intended to be in line with the GLOBE rules. And it seems like every day I'm writing about some jurisdiction, its legislature passing Pillar 2 legislation or amendments to the Pillar 2 laws or proposing Pillar 2 laws, or tax administrations putting out GLOBE information returns, guidance, et cetera. So that's been keeping me busy. Some jurisdictions that have been doing all this, right off the top of my head, UK, Belgium, the UAE, Switzerland, Poland, the UK Crown Dependencies, Canada, Singapore, and Kenya. So a wide range of jurisdictions there. Most EU member states have implemented the EU's Pillar 2 directive, but some missed the December 31st, 2023 deadline to send their legislative text to the European Commission. So the Commission started infringement procedures against those countries. In October, they referred Cyprus, Poland, and Portugal and Spain to the Court of Justice for their slow implementation. Poland and Portugal have since passed Pillar 2 legislation, but Cyprus and Spain have not yet, as far as I know. So that has been something interesting I've been tracking. Another interesting development over the summer, in the American Free Enterprise Chamber of Commerce filed a legal challenge in Belgium's Constitutional Court against the UTPR, which is part of the GLOBE rules, in the hopes that the court will refer the challenge to the Court of Justice so they can decide whether the UTPR violates EU law. And there have been a lot of questions about the legality of the UTPR, and we're seeing jurisdictions like Switzerland holding off on implementing a UTPR because of that uncertainty. Pillar 1 and digital services taxes. So the Pillar 1 final agreement was supposed to be the solution to getting rid of digital services taxes and other similar measures. But because there's no final agreement yet, Canada decided to go ahead and enact its DST in June, which led to a lot of criticism. As you know, the U.S. really hates DSTs because the government says that they unfairly target U.S. companies. So in September, the U.S. Trade Representative, Catherine Tai, requested dispute settlement consultations with Canada under the United States-Mexico-Canada agreement over Canada's DST. And meanwhile, some other countries have been making changes to their DSTs, like Italy. In September, the government approved broadening the scope of its DST. India proposed in July to abolish its 2% equalization levy. And earlier in November, Kenya reintroduced legislation to Parliament that would replace the 1.5% DST with a significant economic presence tax with some differences. So that was interesting. We also saw earlier this year that the U.S. and several other countries with DSTs extended their so-called unilateral measures compromise until the end of June. This was meant to avoid a potential trade war between the United States and countries with DSTs before the Pillar 1 agreement was fully implemented. So that June deadline has passed, so I suppose the compromise has lapsed, raising questions about whether the U.S. will start threatening to impose tariffs on those countries with DSTs. On Amount B, we're not really seeing a lot of countries implementing the Amount B framework itself, just implementing the Amount B political commitment that I mentioned earlier. Just recently, I wrote about the Netherlands taking this approach, and it kind of raises questions about whether other countries will kind of follow this trend going to 2025.
Well, that is a lot that you're keeping track of. So what are we looking to see next?
Well, in 2025, I expect that countries will continue to implement the GLOBE rules, and some jurisdictions will start applying their UTPRs in 2025. So we'll see how that turns out. What to expect from the OECD, we'll likely see more guidance come out from the Inclusive Framework. I know that the Inclusive Framework right now is discussing permanent safe harbors that would save taxpayers a lot of time and effort when complying with the rules. They're also discussing GLOBE rule integrity issues, like how to address so-called related benefits, which are benefits that countries are giving companies in scope of the GLOBE rules. So, for example, a very simple example, if a country with Pillar 2 rules just gives the tax that the company pays them right back in the form of subsidy, that would be a related benefit. So they're trying to crack down on that. There's also work underway to finalize a Globe Information Exchange framework so that tax administrations can share this information. It'll be interesting to see what happens with the Belgian legal challenge against the UTPR, but it's not likely we'll see a decision anytime soon, but I'll keep an eye on it. On Pillar 1, maybe we'll see a final Pillar 1 agreement of some kind, or at least some kind of statement from the inclusive framework about negotiations. One big question mark, though, is whether countries will continue with their DSTs or try to change them so they don't look like DSTs to avoid riling up the U.S. On Amount B, it's unclear how many jurisdictions will implement the optional Amount B framework, but I expect more jurisdictions to at least fulfill their Amount B political commitment. And apparently there will be Amount B guidance coming from Treasury by the end of this year, so I'm on the lookout for that. Of course, the biggest question of all this is what happens to the two pillars under the second Trump presidency. The U.S. hasn't adopted Pillar 2 yet, but Republicans have signaled that they're very against Pillar 2. It's also difficult to see how Republican Senate will push through a Pillar 1 multilateral convention. We do know that Trump has an appetite for imposing tariffs on countries with DSTs, so maybe we'll see action in that area in 2025. And also in the background of all of this is what will happen with the talks at the UN now that the terms of reference for a framework convention on international tax cooperation has been approved. A lot of questions there about whether there'll be duplicate work, particularly on Pillar 1. But one thing is for certain, I will have no shortage of things to write about next year.
Well, I, as an editor, very much appreciate that. And I thank you very much for bringing us up to speed on all of this.
You're welcome.
And now, coming attractions. Each week we highlight new and interesting commentary in our magazines. Joining me now is Acquisitions and Engagement Editor-in-Chief Paige Jones. Paige, what will you have for us?
Thanks, Dave. For this year's annual Person of the Year edition, Tax Notes Federal is recognizing 3 entities: Georgetown Law Professor Dorothy Brown, IRS Commissioner Daniel Warfel, and the U.S. Supreme Court. Tax Notes State has chosen Diane Zilka as its Person of the Year. And Tax Notes International has selected 3 honorees as Persons of the Year: Akeem Pras, the OECD Center for Tax Policy and Administration Deputy Director; Melanie Dewi Astuti, the Indonesian Ministry of Finance's Senior Tax Policy Analyst; and Eugene Rossiter, Justice of the Tax Court of Canada. And finally, in featured analysis, Joe Thorndike reviews Robert Hannigan's short tenure as Commissioner of the Bureau of Internal Revenue.
That's it for this week. You can follow me online at TaxStew, that's S-T-E-W, and be sure to follow at TaxNotes for all things tax. If you have any comments, questions, or suggestions for a future episode, you can email us at podcast@taxanalyst.org. And as always, if you like what we're doing here, please leave a rating or review wherever you download this podcast. We'll be back next week with another episode of Tax Notes Talk.
Tax Notes Talk is a production of Tax Notes. You can learn more about us by visiting www.taxnotes.com/podcast. When major media wants the straight story, they turn to Tax Notes. Thank you for listening, and join us again for another edition of Tax Notes Talk.
Want more like this? Subscribe for more tax videos. Special thanks to our executive producers Jasper Smith and Paige Jones, showrunner and audio engineer Jordan Parrish, and audio engineer Peyton Rhodes.